And good morning, everyone. Welcome to the specialised versus non-specialised property webinar. Thank you for joining us this morning. Just a quick note to let you know that this webinar will be recorded and posted online for people to be able to watch again at their own leisure. So if you prefer to turn your camera off, please do so now. But we'll get straight into it. This one is an interesting one because it can catch you off guard when you least expect it. You'll get clients that approach you to buy a commercial property, and not all commercial properties are treated the same. So we'll get straight into it. So why does it matter? I guess when lenders look at a commercial property, they're looking at various asset classes. They're looking at the most common ones would be warehousing or light industrial, retail and offices, but they're considered standard commercial. You've got non-standard commercial, which carry more risk, and therefore the LVRs could be different. The valuations will have different metrics in there that also will, I guess, determine whether it's a higher risk type asset or not. Policy appetites change across lenders. So it's really something that you need to get on top of right at the beginning of a transaction with your client when you're having that initial discussion to find out what kind of property that they're actually looking to purchase.
And I think on that too, it's to make sure you understand how many, options are out there for the particular property that your client might be looking to buy. You want to be well equipped going into those conversations. So understanding where that asset sits in terms of the appetite of the lenders is really important, because you may have plenty of options on the table if it's a very generic commercial property versus, say, a specialised one that maybe only has a small appetite across, a smaller section of lenders as well. So, yeah, really important to understand that from the outset.
So what is non-specialised or standard commercial property? Like I said, it's industrial warehouses, offices, retail shops, normal commercial suites, like things that could be used as offices or consulting suites, not to be, mistaken for medical suites. Multi-use tenancies, for example, if you've got the old milk bar with a house at the back or upstairs, or in more modern times, a retail shop downstairs and a couple of apartments upstairs, they're not considered residential. They'll be considered commercial, where they're all on one title. Because of that mixed use proposition.
So that could be like the properties, say, if you see down Clarendon Street, South Melbourne,
yep,
or Bridge Road, Richmond, that kind of thing.
Yep. Exactly. So specialised property, we've got, quite a few examples here. The main ones we see would be childcare, aged care, petrol stations, cold storage units, probably not as much in metro, but you definitely see them out in regional, hotels and pubs. So these are basically purpose-built property or purpose-built buildings that can only be used for that purpose for which they're built, and it would only be able to be tenanted by operators of businesses that would normally tenant those properties. And the other thing is they would need to be retrofitted to be able to become standard properties. So it's not just a proposition where you can buy a childcare centre today and one that's been specially built for that purpose and then turn it into a shopping centre, for example. So this is where that specialisation comes into it.
So I guess from a lender's lens, the pool of buyers, or should we say even tenants, is smaller.
It's smaller
because it's very niche to these particular types of industries and operators.
And a quick note, guys, this webinar is specifically around the lender's view or finance view of standard and commercial property and appetite and policy. It's not about which property you should look to buy. This is not property advice, but yeah. So from a lending standpoint, these specialised properties are harder to use for other purposes, and therefore they carry more risk because of that narrow focus of what they can be used for and which tenants will likely tenant them. So what should impact the loan?
I was going to say, just touching on that though, guys, some lenders also in these specialised property markets do have some great appetite for them. So don't be, I guess, alarmed or don't be concerned that there's not going to be a house for your client if they have a specialised asset. There certainly is. It's just, once again, being aware that it's probably just a slightly smaller pool of lenders that want to play in there, or should I say, provide as good as an option for funding per se, compared to, say, a more general industrial or warehouse type asset that, once again, is more common.
Yep. I guess it's also probably the treatment and the policy around lending to non-standard commercial property. It's probably more focused. You will have, like Eamon said, a lot of appetite from lenders for for specialised property, even though they carry more risk, but they just have different policies and they need to hit different metrics. So, for example, LVRs are typically a little bit lower. They can be as low as 50, like in the case of the older petrol stations where contamination risk is a possibility. That is why LVRs are so low, because of that inherent risk. However, in saying that, some specialised property can be a little bit higher in terms of the LVR, can go up to 65. Generally, though, you're going to need full assessments. It's very rare where we can get these done on a low doc type of a loan. And the reason for that is, like, if we go back to childcare, for example, they will have to have a look at which operator is tenanting that property, because they prefer blue chip operators to, a random, not backyard operation, but a random mum and dad operation. They'll also want to know how many children the centre is licensed for, and that can determine part of the value as well. So there's just more things to tick off in terms of the risk profile and also the valuation metrics.
Well, just adding to the assessment piece, guys, with these assets that we've sort of just touched on, childcare, aged care, or even petrol stations, typically speaking too, they're going to be a high ticket price, once again, generally speaking. So they might be, $5 million and above potentially, with some of these in those larger asset classes. That also means that they potentially sit in a different segment of the bank for assessment purposes. So you may find that they've got specialised areas that do this, specialised bankers that will need to look at these types of deals. They can't just go to any banker. So once again, that's something that's really important when you're looking at this assessment, because if it's just a general warehouse, as we touched on, pretty much any business banker, commercial banker can look at that, even small business, depending on the size of the deal. But once you get into these specialised assets, you might find it actually has to go to a dedicated team or dedicated banker to assess it, because they understand those specialised assets. So something really important to keep in mind.
Yep. The other important thing to keep in mind that could potentially affect the value and a lender's appetite is the last point there, the time to resell or release the property. And generally, if it's a purpose-built facility, it may take a lot longer than the usual 3 to 6 months to resell or release. So in terms of case studies, Eamon, we were talking about the different segments. You get a normal warehouse that you could potentially get 80% for in a small business segment, up to, say, about a loan amount of about 3 million.
Mm-hmm.
That's not uncommon. Whereas you look at, for example, a petrol station that's worth $5 million, but it's a little bit older, and they've got to look at EPA and all that sort of stuff. Which segment would look at that?
Well, once you're getting into that, to those more complex transactions, you're going to find that they're going to sit in like what we call commercial banking most of the time, or not. What I will say is probably not in that small business space. Once again, we're talking more general here, guys. So there's always exceptions to the rule. But once you start to get into, these more specialised assets where the assessment is going to be more in depth around the viability of funding for that particular purpose, you'll find that those policies sit more in that commercial business bank space, in that higher level, than they would in, say, a small business specialist sort of space under that 1 million framework. So we do talk about segmentation a lot, and we have in previous webinars, and it's really an important piece that many people probably overlook, because the banks, they like to have specialists across all types of lending. You know, they've always been tweaking. It doesn't matter which bank you're looking at. They tweak their teams to be able to service certain industries with experts that have seen these transactions day in, day out. And it's no different with property. And we haven't even touched on construction today. We're talking about just completed assets. But once again, that's why you've got dedicated property teams, you know, in many of the banks as well. So I guess that's what Clue offers, is the understanding of what segment a particular transaction will sit. And I guess just for your knowledge, like when you're talking to your clients, you know, I think broadly speaking, if you're dealing with sort of pure investor, they might lean more towards your general commercial properties where there is a larger buyer pool, for example, and not as complex, because for them, it's a maybe a more suitable transaction, easy to get into, easy to offload down the track if they want to sell it. Whereas maybe your business owners, you know, the self-employed people, they may be looking more towards a specialised property because that might suit the industry that they work in, for example, or their needs as a business owner. So just something to be mindful of when you're having conversations. Are you talking to pure investor or self-employed? And that may then lead down the path of these different options of specialised versus non-specialised.
I guess if you've got clients already in certain industries, like for example, to borrow this example that we got on the screen in terms of childcare, if you've got clients that are already operating a childcare centre but don't own the property, they may be looking to purchase that facility from their landlord, or they may be looking to set up a second childcare centre but wanting to own the property, and that's not that uncommon. And you're probably best placed there to assist them to do that, because they've already got an existing business. They're just trying to shore up that business, and instead of paying rent, pay the bank to ultimately own that property.
So one little niche there, guys. It's sort of specialised, but once again, sort of knows those medical practices that I guess can be repurposed sometimes as a residential asset. If there was the medical practitioner was to vacate, correct? But if they're running a business and looking to buy a premises to operate their medical practice from, many lenders these days will potentially fund up to 100%. Is that right?
Yeah, they will. They will. And for certain industries like medico, you can potentially get up to 100%, but also other professional services like accounting, for example. We did one for a partner's client who there was an accounting firm wanting to buy their own office, and we were able to fund 100%. Now, that's not to say that 100% is going to be on interest only forever. We structure it in a way to keep the bank happy, and also make sure that the clients can pay down to a certain LVR to be, you know, a comfortable investment for them. But what it meant was they didn't have to fork out, you know, the additional deposit and stamps for pull that out of cash flow, and that works really well for professional services and medicos.
And I guess generally speaking, just to add to that, if you're wondering how that's you know, can be achieved, usually it's because it's supported by the trading business. So they obviously run the business. They now want to buy the asset where the business operates from. The bank has more comfort around lending above the standard threshold LVRs to those types of clients. But usually they'll take a charge over the company. The company will support the debt, which makes the transaction work both for the lender and for the client.
I'm going to chuck a curly one at you. This one is a little bit off script, Eamon, but we've seen this probably a little bit more frequently in the last couple of years, the old NDIS property. So they are definitely, they're very unique. They're classed as, non-standard, and not every lender has appetite for them. There is some appetite, but you've got to go looking for it. But they're very high yielding. So the problem with it is, though, it's very new and it's changing goalposts, and really just depends on what the government of the day does to that space. But I thought I'd mention it there because you might see it.
I think from an investment perspective, yes, some clients certainly see them as great potential investments. However, I'd probably just have a little bit of caution around entering into those transactions before you've done the research or come to an expert, because some lenders have certainly adjusted their policies and their viewpoint on NDIS properties for obvious reasons, as you've touched on, and some changes at government level. So although still, plenty of people have got interest in this type of asset class, would certainly sit in that, I would say, that scope of specialised again. And you really need to be across all the detail around what works, what doesn't, and what your client's looking for.
Yeah. So you're sitting in front of your client. They've told you they're looking to buy a commercial property. Some of the things that you could ask them is what type of business will operate from that property. Try to get a gauge of what that property actually is. If they haven't decided yet, just see what sort of interest or what's interesting them in terms of commercial property, and you might get a gauge of which path they might go down.
I think, sorry to jump in there.
Yeah.
I think a really good one with these, because we often have clients come and go, oh, I've got this property, I think I can do this or that with it. Zoning's really important. I think first and foremost, it's finding out what is the zoning classification on that particular asset. And often clients may not even know. That will be a really good indicator, first of all. And also understanding, is it one title, multiple titles, things like that, especially where you've got that mixed use type property.
Mm-hmm.
Those are probably some early questions to really start to get a better understanding and framework of what is the type of asset they're entering into, and that will help guide sort of where it goes in terms of lending.
Yep, definitely. But I mean question number 2 is the building designed for one specific use. If you're kind of getting that feeling, ask that question, and you'll pretty much know straight away.
Well, if it's a gym, it's most likely going to be used for a gym.
That's right.
Unless it's a very open basic warehouse, of course.
All right. So, I mean, you want to just take everyone through how Clue can help them with these sort of transactions?
Yeah. Well, once again, I think the easiest thing for everyone on the call here is if you've got these opportunities, it's jumping onto the platform and sending through the inquiry. We've designed the platform so that if you've got plenty of information around the transaction, certainly you can enter that information, answer the questions, or if it's easier, you can obviously provide the details to the client, a little bit of a summary around what is the commercial property they're looking to buy, what's the reason behind it. As long as you give us a little bit of detail, our team can then jump on it. As you know, guys, once we've had a call with the client, we'll obtain further information to be able to complete the opportunity in the Clue platform, and then that will be updated so that you will get information around that and you'll be able to track it from that point on. I think the main thing though is, if you identify these opportunities, is flagging them with us as soon as you can, and our team's able to uncover all of those other details that you may not be able to have uncovered in that initial chat. But the main thing is that you're asking the question around, what's the purpose behind the investment? Do they have any understanding of who their potential tenant will be? If you're asking some of those questions, it's a good start. But then the Clue team can really take it from there and hopefully pull that together for you.
And importantly, we'll typically know which lenders will have appetite for what type of property if it is not standard. So that takes a lot of time out of the deal for you. So we're doing all the lender research, going straight to the lenders that we know will support such transactions.
Now, just quickly before we wrap up too, if there is any questions, guys, there is obviously the chat function there on the call. So feel free to put any questions down, and I'll have a quick look at them when we're done here.
Yep. And just to recap, so non-standard properties, tighter appetite, tighter policies, but there are still options. Non-specialised or standard commercial, heaps of options, whether it's in small business or, commercial bank. There are plenty of non-bank lenders, private lenders. There are plenty of options out there. LVRs pretty high for non-specialised property. Yeah. But otherwise, we handle everything else for you guys. So,
well, the only thing I'll just finish up with saying, guys, is especially with so many changes that have come out recently off the back of the budget and other government announcements over the last period of time, we've definitely seen an increase in inquiry level into commercial lending. And although we've still got our traditional clients that have been doing this for years, we are finding new people coming into this space, and they're just dipping their toe in the water, wanting to understand a little bit more about it. So no doubt you guys are probably seeing the same thing. We expect this to continue. So if you are having those conversations and need some help, we're here, our team's here, and we can certainly jump in and hopefully give you guys a chop out. And
today being the 11th of August means that people can't buy can't borrow to buy residential property in their SMSFs anymore. So we expect that the commercial property conversation, at least within the confines of SMSF lending, are going to start to become more frequent. So, I mean, you just got to follow the business, guys, and that's where it's leading to. like Eamon said, the inquiries are becoming more prevalent around commercial property, whether it's outside of super or within super, whether it's for investment or owner occupation. Just keep your ears out. So guys, if you haven't already, jump onto the website, cluefinance.com.au, and if you haven't signed up to become a partner, feel free to do that. It'll take you 2 minutes. But the best way to see how this process works is flick across your first deal, and then we'll get in touch with you and your client straight away to workshop it with you. Other than that, the next webinar is going to be about getting your client buy ready in commercial. Obviously, in residential land, approvals in principle are quite common. We're going to be talking about that same concept, but in commercial, because it's not as straightforward. So in the next webinar, so make sure you tune into that. But if you've got any questions, feel free to chuck them in there now.
Looks like we're pretty good.
Yep. But there's the MFAA CPD event code. Take that down. We're also going to be uploading this onto our insights page on cluefinance.com.au. It's also going to be on our YouTube. So if you've got any team members that need to watch it and get MFAA codes, feel free to direct them to that. Thank you very much for joining us. And yeah,
Thanks,
if you've got any questions, you know where to reach us.
See ya.
Just a quick one, Louis. You still there?
Yeah, we are.
Go for it, mate.
Yeah, cool. Just going back to your NDIS question. So I guess, do lenders traditionally allow us to go, because like you said, specialised is a lot tighter. Do traditional lenders allow us to go up to 80% for NDIS properties? And also, are they going to ask for government contracts or anything like that to support it, or they're purely just going to look at existing business financials?
It's a good question. I think firstly, I don't recall seeing 80% for NDIS properties, and it just depends on the type, because as you know, there are different categories of NDIS property. Some can be very high needs, some can be very low need, but they will vary. I don't think that they'll get to 80.
I think I'll just put an asterisk there again, deal size, in terms of the asset
correct.
value and borrowing
and lender segment.
limit.
And type of lender. The other question you had was around the contracts in place. To justify the rental that you're expecting to get or utilize that rental, I believe there will have to be a lease in place to begin with. And if not, there's probably going to have to be some sort of indication that you've got a tenant lined up, or at least a property's been enrolled with the relevant authority.
Yeah, so I guess your question was around whether it's lease or financials. Typically speaking, to cover those bases, we'd ask for both.
Yeah.
Nah, perfect. Thanks, guys. Appreciate it.
No worries, mate. Thanks for joining.
Thanks for the question.
Cheers.
See you, mate.
Any other questions before we finish up? No? Okay.
We're all
Awesome,
good.
guys. Thank you very much.